This is the panel on altcoins, and before I introduce our three awesome panelists, I'm going to read out a list here, and you'll see what it's about. Ripple, Litecoin, Aurora Coin, Peercoin, Dogecoin, NXT, Namecoin, Mastercoin, Silicon Valley Coin, BitShares slash ProtoShares, Aphrodite Coin, Counterparty, Quark, Feathercoin, NovaCoin, almost done, Primecoin, Vertcoin, Infinite Coin, well, I guess we don't need anything else, Spain Coin, Maxcoin, Darkcoin, Megacoin, and then Greece Coin, Blackcoin, WorldCoin, YB Coin, and Mintcoin. So, as you might have guessed, these are all altcoins, but they're altcoins with a specific property. Can you guess what that is?
Non-zero exchange value?
Right. They all have, in fact, more than $1 million in market cap. And I wanted to say that right out front because to emphasize that that is not the reason that we here are particularly excited about altcoins. A lot of the excitement about altcoins out there is kind of driven by speculation. A lot of people want to have sort of their own cryptocurrency and get in on the ground floor, so to speak, as the expression that's been used. That's great. Speculation is fine. I have nothing against that. But the aspect of altcoins that I think is interesting to a lot of us today, as researchers and developers particularly, is new technological innovation by designing alternative cryptocurrencies and trying to do interesting things with them that you can't necessarily do using Bitcoin. So I wanted to put that out there, what this excitement comes from. And I think we're going to hear a lot about the very cool altcoin designs and implementations that the panelists here have been working on. So in alphabetical order, on my left is Jeremy Clark. He is, as of recently, a faculty member at Concordia. Congrats, Jeremy. Thank you. And over the last decade or so, he's worked on a number of crypto topics. E-voting, I was hearing some of his work on cryptographic elections just last night. He's worked on HTTPS, but one of his current interests is Bitcoin, and he's going to talk about some very cool altcoin designs that he's worked on. Matt Green, among the many things he's known for, he has this fantastic blog where he explains crypto sort of to the general public in a manner that's as good as anybody else that I've seen out there. He's a research professor at Johns Hopkins. And I'm sure all of you have heard about Zero Coin and perhaps Zero Cash, and we're going to hear about that from him today. Peter Todd is someone who doesn't care much for affiliations, but I'm going to present one of his affiliations. He's chief scientist and developer at Mastercoin, and Mastercoin is the one thing on that list that I read out to you. So he both talks the talk and walks the walk, I guess. Anyway, so we actually have two Canadians on the panel today. When we invited them, we told them it'll be spring by the time the conference happens, and so they accepted right away. But I guess that didn't quite pan out, so we owe them an apology. All right, so what I'm going to do is I'm going to ask the panelists to each in turn talk about what they think is the potential of altcoins and the sense in which they like to use the term altcoins, or the sense that is most exciting to them, because I think it's been used in a number of ways, pretty generally, as a variety of ways in which you can extend Bitcoin or have alternatives to Bitcoin. And I will also ask them to talk specifically a little bit about the designs that they've worked on. And then after we hear from them initially, we'll go to some more discussion, and around the halfway mark, we'll go to the audience. Jeremy, could you start us off?
Yeah, sure. Thanks, everyone, for coming. So altcoins, I mean, it's maybe very simple, but they have some similarities with Bitcoins because they're an alternative to Bitcoin. But by virtue of being alternative, they obviously make different design choices. So to me, an altcoin, the thing about Bitcoin that they really need to preserve, in my mind, for it to be an alternative to Bitcoin as opposed to just an alternative virtual currency, is the decentralized nature of Bitcoin. So I think that's the primary thing. If we use that as our metric, then I see that there's two classes of altcoins, and then there's sort of a subclass of interesting technologies that aren't quite altcoins. So the first class of altcoins are altcoins that try and do the same thing that Bitcoin does. So Bitcoin is a currency system, and these altcoins also try to produce a currency system. The difference is that they're going to make different design decisions that will lead to different properties that obviously they think are improvements on the original design of Bitcoin. So some of the common ones are shorter block intervals. Zero Coin would be stronger anonymity. A lot of them address the proof of work to make it maybe less wasteful or more equitable. So those ones I'm not that interested in. My personal research is more on designing altcoins that provide new functionality. So they don't set out to do what Bitcoin is trying to do. They're not trying to be currency systems. What they're trying to do is something completely different, but they're trying to preserve that decentralized property of Bitcoin. So one thing that I hope to get into, but I won't talk too much right now, is we've done some work on prediction markets, and we have a design for a decentralized prediction market. Other things that exist, one thing from the list, I think, was Namecoin. So Namecoin is about binding domains to some sort of name or some sort of data like an IP address. You can do things like smart contracts. And then the subcategory that isn't technically an altcoin is as soon as you start thinking about adding new functionality, you don't have to go out and start an altcoin, right? You could try and do it within Bitcoin itself. So there's also this subclass of things that are trying to do the adding the functionality and keeping it decentralized, but not, presenting a brand new altcoin. So things like colored coins were mentioned, some work that we did for providing a really strong notion of timestamping called commit coin. There's anonymity you can also do in this context. So we have a paper about mixed coin. There's technologies like CoinJoin, CoinSwap, those types of things. So that's just a rough taxonomy in my mind. How much, do I have a minute or two?
Oh, no, go ahead.
Okay, I'll just, let me say one thing that I think is an interesting problem, and I'd be interested to hear what the panel thinks and what the audience thinks. So when you have these altcoins that are providing new functionalities that aren't setting out to be currencies, one of the problems that you have is the way the consensus model works. Someone called it Nakamoto consensus, which I like. So the way Nakamoto consensus works is it relies on incentives. And so you have to pay your miner somehow. Whether they're mining new coins or it's through fees, you have to pay them. And so the problem is that even if all you want to do is bind domain names to IP addresses and you don't care about currencies at all, you're not setting out to replace Bitcoin. The problem is you just can't use Bitcoin to pay your miners because in Bitcoin you have to specify who the recipient is. And when you ask or request a domain name, you don't know who that recipient is, right? And of course, Bitcoin has this scripting languages, so you can do things a little more general than just specifying a recipient, but it becomes very difficult that even when your domain name is registered in this alternative blockchain, for the Bitcoin side of things to figure out that this was actually registered and this was the miner that solved the block and that some reorganization isn't going to happen and make that block go away. So I think that's one of the most pressing issues. If we can solve that problem, then things like Namecoin don't have to, we don't have to be in the business of inventing new currencies every time we want to do some interesting new functionality. We can just stick to that functionality itself and let Bitcoin or whatever other alternative currency handle the currency side of things.
Go ahead, Matt.
Okay, give me a sec. So when I first became interested in Bitcoin a couple of years back, the thing that interested me, of course, everybody's going to say the same thing here, but the thing that interested me was the decentralized nature of it. But not for the reasons that I think most people think of when they think of decentralization. So computer scientists say decentralization, they think, oh, fault tolerance, they think of all these things. But that's not, to me, what's interesting about decentralization. What's interesting is that when, we've had functionalities like electronic cash, we've even had anonymous electronic cash, we've had many of these things that people have discussed for years and years. But nobody has actually gone out there and implemented them in a serious and viable commercial way. What's different now with Bitcoin is that the startup cost of taking a new idea and bringing it to fruition has gone from essentially, a nearly infinite thing where you have to get a whole bunch of people to trust you that you're going to continue to perform some action, run some server, and keep a service running. It's gone from this very high level to something that's almost negligible. You can start with nothing and then build from there. And this is a really subtle and even kind of a stupid distinction, but it's a major distinction, and it's kind of turned this entire area on its head. Now, altcoins, where they come into this is, of course, what's happened since I started looking at Bitcoin is we've gone from this idea that everything was Bitcoin and we just had to come up with extensions to make Bitcoin better to this idea that there's this entire diverse economy of different coins that have different ideas baked into them. And the insane thing is that no matter how ridiculous your coin is, people will actually use it and they will test it with real money. And that's also significant because testing something with real money is the best way to find out if that thing is actually secure. If you can lose $50,000 or gain $50,000 due to a security hole, that's a whole lot different than writing down an idea and saying, I think this might work. So that's what's exciting to me about altcoins. Now, the specific altcoins that are out there, many of them I think are, they're interesting, they're great, people are making them work, and some people think they're worth investing in. But of course, as everybody else here is going to tell you, the ones that interest me are the ones with new features. And there are a whole variety of new features that we can implement. I'm very excited about some of these new currencies that give you this general computing capability that maybe we can build all sorts of neat things on. However, I am not an expert on altcoins in general. My specific area of interest is on particular coins that will add privacy features. And the particular kind of technology that I've been working on is something called Zero Coin and more recently Zero Cash, which allow you to build currencies that get rid of all the privacy problems that exist in the blockchain. So that's kind of where I stand on altcoins. Now, the question is, what will these kind of altcoins, the privacy-preserving altcoins, do to the entire Bitcoin infrastructure? This is a question that it keeps me up at night, because once we have some currencies that provide strong degrees of privacy, and there is some way to exchange between these things, and I think decentralized exchanges are likely to be one of the next innovations, does that mean that the entire Bitcoin infrastructure, all of these other currencies that don't provide this, are in some sense now going to be a target of regulators, of governments? Are there going to be maybe stronger incentives to go after every one of these electronic currencies because we have some that are private? This has been a problem. I don't know what the answer is. But in general, I don't think we can stop these ideas from happening, and I think that altcoins are the platform that allows us to test and experiment with these things, and I think that it's very exciting to see what's going to happen in the next couple of years.
I'll have to admit, 6 months ago I would not have expected myself to be on a panel talking about alt currencies at all. I act like next week I'll be spending a week in Switzerland helping out Hive Wallet, which is just a Bitcoin wallet, on their payment authentication stuff, and a lot of my other work's been very directly related to Bitcoin. But also, I've always been very interested in how does mining work, how does consensus work, how do all these nitty-gritty issues work. And recently, as chief scientist of Mastercoin, as well as working with Counterparty and Colored Coins, I think there's a lot of very interesting research questions about that. And my role for those projects has been to go and answer those questions and better understand how does all this work. I'll have to admit, when you go look at altcoins like, say, Dogecoin and the huge, huge list, they don't really interest me because the tech isn't different. But where the tech is different, I think that's a lot of interesting questions. I think what's interesting in this space is the way security works, the way that consensus is something where we win if we all come to consensus together. We've seen a few altcoins get killed off. Feathercoin got 51% attacked. Coiled Coin got 51% attacked. I'm sure I'm missing tons of others. I don't really follow this stuff. Yet, then you have models like Mastercoin where you go say, all right, we're going to make use of one particular part of what Bitcoin consensus does, which is the ability to go prove that you've published data, and then use that to go and create our own consensus system. And as controversial as that is from the people on the other side of things, the people who are building Bitcoin, at the same time, from a theoretical point of view, I think it's fascinating that you can do this. And I think relaxing the constraints on what miners are supposed to do potentially has a lot of interesting possibilities for Bitcoin. So I wouldn't necessarily make such a sharp dividing line between all these systems. I think they actually have a lot in common. And understanding the interplay of these different systems makes a lot of sense.
Thank you. That was very enlightening. Now, one thing that I noticed between something Jeremy said and something Matt said, and I want to throw this open to all of you, that I found was interesting, was that Jeremy pointed out that it's one of the problems with altcoins is that you have to assign currency semantics to it currently. And that's perhaps a bit of a barrier. Whereas Matt pointed out that decentralized systems, by their very nature, compared to what came before them, have made it a lot more easier to deploy these ideas than before. So those are not necessarily in conflict, but it seems like Jeremy wants things to be even easier, and Matt is celebrating how easy they've gotten. So, where do we see this going in the future? Is the current level of ability to deploy altcoins, is that good enough for most types of tinkering, or do we need much more change there?
Yeah, so easy is a weird question because, copying Bitcoin source and then making tweaks is arguably the easiest thing that you can do. And so even though what I was thinking is sort of more functionally pure, where you have an altcoin that only tries to implement the functionality that it's intending to use, it may actually turn out to be more difficult to implement that because you would have to strip out a lot more of the code that you're just copying from. Yeah.
So, go ahead.
I'd say too, I think when you have currencies which are attackable, easy becomes a very social question. I mean, as much as I said I wasn't that interested in Dogecoin from a technical point of view, from a social point of view, I think it's fascinating the way that they built a community. They did it so quickly. They managed to get past that initial hump, which very few other projects ever have managed to do. And on the one hand, that's kind of nice. It's kind of nice seeing that social thing, but it isn't a model I think that works for experimentation. It's not a model I think that works for niche interests. Often people bring up merge mining, where you go have two currency, or I shouldn't say currency, I should say consensus systems, where one refers to the other so that work done on one applies to the other. But at the same time, if you have a niche system, that can mean that your small system, which not that many people are interested in, can be attacked at zero marginal cost to someone who also isn't interested in it or actively wants to get rid of it. So you're very right in terms of, on the face of it, it looks easy, but there's so many other issues beyond that.
Yeah, thank you for elucidating that distinction between the technical ease and the social factors that go into making one of these successful. Matt, did you have a thought on that as well?
I just want to say that everybody here has probably more experience monkeying in the Bitcoin D source code than I do. But anybody who says that it's easy to make dramatic changes to that code, I have enormous respect for them. And it could be made a lot easier, and so there is definitely room for improvement.
Anyone who understands moon math, I have a lot of respect for too.
Peter, I'm glad that you brought up merge mining. On that note, I want to ask if the panelists could perhaps elucidate what are technically all of the different possible ways in which one could extend Bitcoin or create an alternative cryptocurrency based on the same principles. I know that Joe alluded to this in one of his slides, but it would be great if we could have a little bit more in-depth discussion of what the different possibilities are technically.
Yeah, so I think our first model, which I think is the most common, is the parallel chains model, where you simply take the Bitcoin source code and you fork it, and you say this is a different system, miners go work towards it, and that's that. And that's a very common model, but it does suffer from the problem that your strength of consensus, how many miners you have, is split across all these different possible space of ideas. So you're much stronger if your development effort can be centralized on one project. And I think what we've seen with Bitcoin is you get a lot of very smart people who realize this, and they go off and work on Bitcoin. And they contribute to Bitcoin. I think that's been very valuable for Bitcoin. The next model is what Namecoin pioneered, which is merge mining, where you say, okay, my second system, the rules of the system are that you are allowed to go prove to me that you have done work, but that work may also be reused for another chain. In the case of Namecoin, if you mine Namecoins, you're also mining Bitcoins at the same time. And that model appears to work very well if you have a second system which is very popular. Namecoin is one of them. Last I heard, they had about 83% of the total Bitcoin hashing power, which is to say that out of all the work that goes to Bitcoin, 83% of that also goes to Namecoin, which makes Namecoin roughly as difficult to attack as Bitcoin itself. On the other hand, because you're allowed to reuse work, that also means that if you're a Bitcoin miner and you think coiled coin is a historical example, is a bad thing, you can say, all right, fine, I'm going to go point my Bitcoin pool at coiled coin and I'm going to kill it off. And for you, your marginal cost as a Bitcoin miner to do that is essentially zero. It's an hour or two downloading the client, changing some stuff, and hitting go. So there's a very strong downside. I also think there's a hidden downside, which is encourages centralization, I think, in that if you're earning money from Namecoin, DevCoin, I can't, whatever other coins you have under this model, that is making earning money as a miner something that you need to install a lot of software, you need to have a lot of administration overhead, and that's something a pool can do best because they're a centralized entity and they only have to do it once, versus a bunch of small miners who may not never bother. Me personally, I do not mine at a pool, and I don't bother mining Namecoin because I've never bothered setting it up. So I am earning slightly less money than someone who does. And then going beyond that, I think this is where things start to get really interesting and sort of really untested, which is you can have a model where rather than having proof of work by hashing, you can say, okay, I'm going to go and throw away some Bitcoins, and I can prove this because Bitcoin is a cryptographic system, and I can say rather than doing hashing work, throwing away Bitcoin's work constitutes my vote in the consensus. And there's a lot of nuances to how you can do this, but the long story short is this is sort of a replacement for mining. But there's a big catch with this, which is data. And what's curious about Bitcoin is, let's suppose we had a Bitcoin model where you could know how much work had been done towards a particular blockchain, but you don't necessarily have the blocks, which is true in Bitcoin. You can do this, but currently most of the code deployed doesn't. Well, it's kind of always unclear to you, like, do I build upon this chain that I don't really know the contents of, but it may be in my advantage to? I mean, what happens if some data gets lost? How do I make sure that I actually have the best chain? And I kind of call this sort of in general the data hiding problem, where someone can do some work, and they can do it very easily because it's work done by throwing away Bitcoins or burning Bitcoin age or something. And they can mine a bunch of blocks, so to speak, in the system, and then just never tell you about it. But instead go tell Bob there and have him exchange something of value for it. And, this gets into a lot of complexity. I mean, if you're, say, trying to make a system where you map names to values like Namecoin, I think you can go make this kind of thing work because often it'll not be in your incentive not to tell people what this mapping is because otherwise they can't look at your website. But in cases where, say, finance stuff is involved, where, say, you have an exchange for stocks or something, well, that gets a bit more iffy. Which then gets to my next point, which is I see Bitcoin itself as something I call proof of publication, which is, again, suppose I'm going to give Matt Green here Bitcoin, and I give him my transaction and tell him, look, it's in the Bitcoin blockchain, it's valid. What I'm really doing is, within the rules of Bitcoin, I argue that I'm telling him, I have published a transaction signing away my Bitcoins to his, and you can check and know that that was the first time that ever happened in the history of the Bitcoin system. So really, I have proven to you, I have published this data, my transaction, to all the possible people who would care, which is you, and potentially anyone else who might want to accept my money. And they can all verify, yes, that was the data published first, that's good to go. Which leads to the next interesting question. Do miners actually need to stop double spends? I argue no, they don't. You can validate all that information. In fact, you can validate the whole blockchain. So from that point of view, yes, that isn't actually required, which is kind of surprising, I think. But of course, there are efficiency gains to just letting someone else do validation for you. And equally, if you're in that model, well, then you get back to the data in the blockchain thing that many people are concerned about.
Cool. That's a lot of different options there, some of which I'd never thought deeply about. And the 83% figure for Namecoin, that is very surprising to me. I had no idea about that either. Matt, I want to go back to something you said about the Bitcoin source code. And I mentioned that because Zuko pointed out to me yesterday something that blew my mind. In the original Satoshi Bitcoin source code, apparently, and this was posted on Reddit a day or two ago, there was partially completed code for a distributed market system, including product listings and reviews and so on. And then it was stripped out at some point. And as Bitcoin currently exists, it's fairly conservative in what the core system itself supports, which is what has led to this flowering of interest in altcoins. And so I'm curious, sort of hypothetically, if we were doing everything over differently, would you be happier if Bitcoin itself supported a whole laundry list of more features, or are we better off the way we are and all of this experimentation existing in parallel? I'll ask Matt that, but also the other panelists.
So
Not to put you on the spot, but I'd be curious since you've struggled with this in Zerocoin.
Well, maybe if there had been some additional code written by people who knew what they were doing, we wouldn't have had Mt. Gox. But aside from that, I think the core of Bitcoin is that it did one thing and it did it very well, and people focused on doing that one thing very well. It turned out that the infrastructure around Bitcoin, for better or for worse, popped up all by itself. It wasn't needed for somebody to write that. But writing the initial code for building that hash chain and for doing all of this relatively complex crypto stuff, you needed one person to focus on that. So that's my thinking.
Yeah, I also prefer a pared down currency to serve as a currency system, and so I think Bitcoin fulfills that function well. I think there's room for not 100 altcoins. I think that's maybe detrimental, but if you want more expressive things, coins or whatever you want to call them, I think there's room for a couple of those, and you should keep that expressivity out of Bitcoin itself.
I saw that marketplace a few months ago when I was looking through old historical Bitcoin code, and I gotta admit, I'm really glad Satoshi said, all right, let's go focus. And he did do one thing really, really well. Not as well as I'd like, but that's why we're all here.
That's a good point.
And at the same time, though, I think it's not to say that Bitcoin can't do that stuff. You can go build stuff on top of it that does. An example being, now while buying and selling arbitrary goods is very difficult because you can't prove that they exist or haven't exist, you get a whole mess of reputations. For something like colored coins, where you're just trading digital assets which exist within the Bitcoin blockchain, you can do decentralized exchange by, if you want to get a bit technical, you can half sign a transaction. And I'm saying, all right, I have a share of Microsoft in the 2050s when they're all on colored coins, and I'm going to potentially give it to you or anyone else. And I can sign my part of a transaction authorizing it to move, give it to you, and if you wish to buy it, well, you can sign the other part that also happens to go pay me a Bitcoin. So, it's not to think that this stuff is impossible. And we do have infrastructure to build upon it because we can do things like publish your bids and orders in the blockchain or something linked to it. So, that's kind of where I'm at with flexibility.
Yeah. So I think this talk of shares and markets and all that leads naturally to something that Jeremy promised he would tell us about in his first few minutes, which is this thing about prediction markets. What's that all about, Jeremy? And
Sure.
What are some of the ideas there?
Well, I'll give a few minutes about it. How many people here know what a prediction market is? I'm just curious. So quite a few of you, probably over half. So basically, a prediction market is a mechanism that allows you to, we can call it betting on future events. So you want to forecast some future event, say an election, who's going to win. There's traditional ways of doing this. The difference that a prediction market has is that it's set up more like a stock market. So what you do is you buy shares in the candidates that you think are undervalued. You can sell shares in things that you think are overvalued. You don't have to retain your share or your position in the market right until the event closes. So if you think that someone's just overvalued as a candidate in an election, you can buy it, and when they go down, you can get out right away. So prediction markets are useful, obviously, for the people who are involved in them if you want to try and make some money, but they're also useful for independent observers, because what you can do is you can look at the price, and you can use the price as a proxy for what the market believes is the probability that a certain outcome will take place. I don't want to say something too controversial, but there is some literature that suggests in certain scenarios these these prices will do better than things like polls or statistical analysis at forecasting future events.
Hey, controversy is good for the panel.
Oh, yeah, sure, sure. Anyway, so that's fine. Those are prediction markets. One problem with prediction markets today is that there isn't a really great one that you can go and use. Lots of people use InTrade for a long time. That's no longer, you can't use it. And so we were interested in building a decentralized one, first so that there's no one central authority that's in charge of it. Anyone can form a market. If you want to predict, we were talking the other day, actually Zuko he mentioned that he bet on the hash, who would win the SHA-3 competition. So that's sort of an obscure thing that most people wouldn't want to bet on. You're certainly not going to get InTrade to throw up a market on that. So what an open system allows is anyone can set up any market that they want. It becomes a little tricky because you're relying on computers to decide what outcomes happen in the real world. We have some solutions to this problem. Essentially, they all boil down to having a human in the loop, but there's different ways that you can do that that are sort of interesting. And then there's some interesting sort of technical issues with how you set up an order book when you have a block that only updates once every 10 minutes. You have no global clock because it's decentralized, and the miners can front run any order that they see. So I'm happy to talk about that, but I won't bore you with those details now.
Thank you, Jeremy. That was very interesting. I have to say, I've had the pleasure of collaborating with Jeremy on some of this work, and some of the people in the audience today were also part of this research, but Jeremy was really the driving force behind this. And I think if you have questions, we'll go to audience questions soon. I think that'll be a good time to bring that up. Matt, I have a question for you. You were saying in a hypothetical future where there's, and I think this has come up in some of the discussion earlier this morning as well, let's say regulation of Bitcoin driving people to an altcoin or something like that, and there's this sort of competition between altcoins in a certain sense, especially on the privacy and anonymity axis. Some people might say, oh, let the free market dictate what's going to happen, but you were saying that you had some concerns about that process. Could you elaborate? What are some of the good things or as well as bad things that can come out of this?
So, I mean, in general, I think the free market for ideas is great. You could have some currencies that are completely accountable, have no anonymity. You could have some others that are very private. You could have others that give you capabilities that may be controversial. The only thing that's difficult about it is if you have kind of free exchange between these different currencies, then the fact that one is pretty accountable or is relatively accountable, like Bitcoin, means that people can, be in Bitcoin by day and then off in this private currency by night. So how do you prevent people from, doing some sort of getting their money, getting their salary in Bitcoin, shifting it over to some anonymous network, through some exchange, and then doing whatever they want to do over there and then bringing it back? Unfortunately, the only way that I can see for regulators to really prevent that from happening is either to control the exchanges between those currencies, to eliminate the other currencies altogether, or maybe there'll be some kind of discrimination where there are good coins in Bitcoin, and then there are the bad coins that have come in from the anonymous world. And so I don't like those visions very much. I don't think that there's much we can do about it. I hope we don't wind up there, but it is a possibility. It's something I worry about.
Yeah, that makes sense. So something I want to ask Peter about Mastercoin is that to what extent have you faced the concern that the way Mastercoin is implemented puts a lot of things on the blockchain that it wasn't intended for, and what's your take on that whole question?
Well, I think that's actually a fascinating tie-in to what you're talking about with regulatory concerns, because on one level, from looking on the outside of Bitcoin in, the fact that systems like Mastercoin can do that is really telling regulators, not only are you worried about this currency, but you're also worried about this enormous pile of applications you didn't even think of that can be built on top of this system. And a lot of times they're possible to blacklist, they're possible to stop, but other times it's actually really not obvious how to do it. And maybe it's impossible in some cases. Maybe you can really get yourself in a situation where unless every Bitcoin transaction is whitelisted explicitly, you're enabling all sorts of stuff that regulators might not want. More specifically to Mastercoin, well, I think then that's a flip side. There's the internal level too, where within Bitcoin we make efforts to specifically block certain ways of using Bitcoin. And I myself have proposed some. I mean, early on it would have been about a year ago, I proposed that we go and change the way that, well, we make transactions not be allowed to create extremely low-value outputs. And the problem with that is that those low-value outputs go into this database called the UTXO set. And because that is an output that may be spent in the future, you have to carry that forever. On the off chance maybe someone spends it. If someone does, well, you want to make sure that output really did exist, or the block's invalid and you should reject it. But unless you have that data, you don't know. And I proposed, all right, let's do an economics argument. Let's make sure these outputs are always worth it to spend. And I proposed one way of doing it. Gavin Andresen implemented another way of doing it. But that is an example of saying, all right, we wish to use Bitcoin in a certain way. We are not going to allow people to have implementations of colored coins that just say assign 1 Satoshi per bond. Of course, what's happened in the months since is the colored coin people, after some aspects of the Bitcoin community said, no, we blocked you, go away, you know. They, of course, figured out ways around this. They figured out ways of encoding colored coins such that you can encode how many shares you have, for instance, in any value. And long story short, colored coins are fine. They're not affected by this. Now, with something like Mastercoin, for some aspects of how Mastercoin needs to operate, you need to encode what's really transaction data. You're saying, I've got this piece of data, it represents transaction in my own consensus. We put it on the blockchain. And without getting yet into whether or not this is a good thing, actually stopping someone from encoding this data is very hard. It's easy to go and change how much it costs. We can push the cost up, say, by 10 times more expensive, because very little of the transaction data that we allow can be, can have Mastercoin data hidden in it, or whatever other consensus system. But we can't stop it entirely. So if Mastercoin is, say, worth 100 times more than the cheapest Bitcoin transactions, yet we can only make it 10 times more expensive, it will push out that bottom 10 times more transactions. And I brought this up very early on in Mastercoin's development. If I remember my words, I said Mastercoin was an idea sufficiently stupid as to be indistinguishable from a scam. And I meant that, and I still do. But what I really like, though, is how they've said, all right, let's go see if we can make Bitcoin better. And that's why most of the work I do is actually on Bitcoin. It's on scalability. The problem is if I don't succeed in, say, making Bitcoin scale indefinitely, or someone doesn't succeed, well, then you always have that question of, do we prioritize these other systems? How does that change the economic model of mining? I mean, Mastercoin transactions pay transaction fees, but if you assume that not all the reason why people mine is potentially because they think Bitcoin as a currency is useful, and that's why they're doing it, not because it's profitable per transaction, then yeah, we've changed economics. And we've put Bitcoin community who believe that in a position that they can't necessarily stop it.
Thanks, Peter. I want to ask one last question that I'm very curious about, and then I'll go to audience questions. And this is a question for all the panelists, but it was sort of inspired by ZeroCoin, and this is a question that I think Joe Bonneau has had as well. Sorry, Joe, if you were burning to ask that question in the audience time, but I'm stealing your thunder. But here's the thing. One of the interesting things about Bitcoin is that even though it's a cryptocurrency, the sophistication of the crypto that it uses is very, very low compared to what you might find in even traditional academic work on eCash or any other most types of crypto systems. And there's an argument, and I think it's an interesting argument, perhaps a compelling argument, that this simplicity was a key factor in enabling a reasonably widespread adoption by people who were technically savvy but not necessarily crypto experts themselves, because they could trust that the innards of the system were fundamentally sound. I wonder, maybe if Bitcoin had not been invented at all and ZeroCoin was, in a hypothetical world, the first cryptocurrency that had been invented, how would the world have reacted to that? Would it have been too complex for people to really trust that it would work, or does the technical complexity of the system not matter as long as the experts have verified it? I'm very curious to hear what people's thoughts are on that question.
you know, it was hard enough to explain zero coin, and zero cash is like 1,000 times more complicated to the point where not everybody on our team even fully understands some parts of it. So the crypto is very complicated, and at a certain point you have to trust us. Actually, I just wanted to relay a really interesting story. Some of you probably know this, but I think it was Greg Maxwell yesterday was telling me something about the original implementation of the Merkle tree, which is a part of what happens in the Bitcoin source code, and it's broken. Not in like a critical way that like will hurt you in any serious way, but it's bad. And it's bad in a way that like no cryptographer that I know would have implemented. So I mean, if Satoshi's out there, you know, watching this, I apologize. I don't mean any offense, but like it's really awful. And so to me, that's just an indication that maybe Satoshi is not a professional cryptographer, although maybe he just made a mistake. So coming back from that, the crypto in Bitcoin is really simple. You have to get something. You have to get to the point where you have something that works and does the really hard parts, which is the network communication, the building the blockchain. And once you've got that foundation, you can put all sorts of pretty stuff on top of it. And that's kind of what we're doing, is just putting icing on top of that really strong structure.
I would go and say that I absolutely agree. I think the fact that Bitcoin is that simple is really important. And when I look at ideas myself, I always kind of have this mental model of, all right, is this idea simple enough that a somewhat drunk art student could go implement it on their weekend? Now, having a fine arts degree, I think that's a good model for me. And you know,
Are you saying that you write your code drunk on the weekends, typically?
well, if I could implement it then, maybe I can actually get it right when I'm sober. But I think quite seriously, like you got to be at a level below what you can understand. And that, you can explain this so simply, it makes it much easier to go spot the subtle mistakes.
What I like about the simplicity of Bitcoin too is, I mean, there are aspects of it that are actually incredibly complex, but you can look at it at different levels. Yeah. And so it's a nice sort of modular design. And well, like Joe, the way he laid it out, you can, you can understand the basics of it, even if your understanding isn't exactly correct, your mental model is a little different than how it works. You can understand it to the extent that you can use it. Now, the idea of how much crypto you can get real-world people to swallow is something that I've struggled with in a different realm that Arvind mentioned. My background is in cryptographic voting. So we build voting systems that also use a lot of crypto to basically let you prove that an election result is correct without being able to reveal how you voted to someone else. And through the evolution of many, many systems, we found that the most palatable system is the one that has the simplest complexity. And so we went through a lot of hoops to try and pare down the crypto as much as we could. And that's an area where there's real extremes, just like in DigiCash. There are the Bitcoin-style voting systems, and there's really complicated crypto-heavy systems as well. And the only ones that have been used in a real-world election are the lightweight ones.
And, I think Zero Cash is actually a good example of a practice I like, which to have a system that at one level is very simple. You've got this Merkle tree and some spent, tokens thing. But at the other level, well, then you go add magic to then give it some property that it otherwise wouldn't have. And, if you can do things in such a way and then explain it, I think that's really valuable.
Excellent. Let's go to the audience now. I certainly have more questions, but I'd love to turn it over to you guys. Stephen? You're just passing the mic around. Okay, yeah. In the middle there, I guess that's the first hand I saw.
So this goes back to a question I asked the first panel, which was about futures. So a lot of people, including myself, have avoided making any transactions in Bitcoin because they're concerned about volatility, and volatility is usually hedged by introducing some kind of value future. So I promise to pay you a certain amount no matter what happens to the price. Now, in order to have a future, you need to have some kind of way to go short on a position. In order to do that, somebody needs to be keeping track of either the person who's promising to be short needs to be able to keep their promise, or somebody needs to be clearing those transactions. And I don't see any way to do that without having to trust some party, which there's no obvious, that sort of goes against the principles of Bitcoin. So is there some way to design an alt currency or to overlay onto Bitcoin a way to allow people to go short, have negative Bitcoin wealth in some sense?
So I'll tackle it first, maybe. So a prediction market you could use as a crude derivative. Now, the one issue that you have that you face automatically is that if I want to bet that Bitcoin is going to go down because I want to hedge against Bitcoins that I hold, when that contract expires and say I'm right, that contract cannot pay me back in Bitcoin. Otherwise, I made tons of Bitcoin, but the whole idea was I was trying to hedge against this thing that tanked. And now I have lots more Bitcoin, but they're not worth as much. So what you really need, I think, is you need something on the other side. So you need derivatives that are denominated in, say, US dollars or fiat currency about Bitcoin exchange rates. And that's the most natural way to do it. And in that case, you're out of the decentralized world. And so, yeah, you are going to have to trust someone. Now, the question is, why don't we see that? And so I think one answer is anytime you have to derive the price of a derivative, you have to have some model for the volatility. And so just for normal assets like stocks, there's been 30 years of debate and lots of models that won Nobel Prizes that turned out to be flawed. On how volatile stocks are. Bitcoin is like this whole new world. I don't think anyone knows how volatile they are. I don't know how you come up with the Black-Scholes of Bitcoin exchange rates. And so I think that may be one of the roadblocks towards getting derivatives. But it is this kind of feedback loop where you have higher volatility because you can't short, like you say, you can't hedge against it, but you can't short against it because the volatility is too crazy and you can't model
I
it.
was wondering if you could maybe talk a little bit about that and then whether there are any updates to your plan.
Oh, so in terms of, so the first part of the question is kind of, what is the plan?
Well, I mean, the plan is like crazy, so I thought maybe you could just like talk about it and whether you've evolved since the last time I heard you talk about it.
So we've evolved in certain ways. One of the things we've done is we keep changing tweaks, technical tweaks, but the plan that we announced, the only thing is that we're not confident on when it's going to happen. Our plan is we're going to take this code, we're going to release this code. My plan has always been that we're going to release an alt currency. We're not going to stand there and operate the alt currency. It's not my plan to be in the business of running a currency, but the plan is to release code. There has been some discussion about, will code go into a different currency, and our plan is to release open source code. So I assume that it will eventually find its way into other currencies as well. But yeah, one of the things we're negotiating is exactly when this is all going to happen, and I don't exactly know when.
Yeah, I was asking about the part where you sort of have like trusted people go in a room.
Oh, just that part.
Yeah.
Oh yeah, we're just gonna have some trusted people go in a room and I don't know. No, in all seriousness, I mean, right now that's the best solution we have. There is a limitation on the technology, which is that somebody has to do trusted setup for this parameter one time. It takes some effort, and I've always been of the impression that if you get some trustworthy people who are not going to let anyone pull stuff over on them, then you can do this. Other people that I've spoken to just in the last few days have said, I would never trust anyone. I respect that opinion, but I think most people are like me, and they would trust.
Just quickly, you mentioned reality keys and the prediction markets and so forth. Is there any work that you're aware of that tries to anonymize the order books themselves so that you can place order books, you can place orders on the order book in a way that it's not a centralized order book so that no one can see what you've bid essentially until after you've committed to it, and then if someone puts the counter bid, then it just goes through and there's no way to back out once you know what the orders are?
Yeah, you mean blinding of the values themselves. Well, I will first say there are implementations of decentralized order books that are actually in production. Counterparty and Mastercoin have them. But the cryptography to actually do that, as far as I know, no one's implemented it. And personally, I don't quite know how to do it. I'm going to have to ask Matt.
I can speak to it too. So I looked through the literature, and it's actually almost a lot like cash, or like digital cash, where on one side you have Bitcoin, which is decentralized, but everything's in the open, and then on the other side you have true anonymous eCash, but it's not decentralized. And so there's a lot of solutions for doing dark pools or closed order books using crypto that are centralized. So that technology exists, but it's not in the decentralized model that Bitcoin is. And then between Mastercoin and the work that we do, there is ways of doing a decentralized order book, but the orders are open. It's very transparent. And so what you need is someone, I guess, to come along and combine the two, kind of like, I guess, what Zero Coin and Zero Cash does to sort of marry those two distinct ideas in a single system.
And
But that's open as far as I'm concerned.
And I should point out that having openness can also be valuable, because one of the curious things a system like, say, Mastercoin or Counterparty does with, it proves that there did exist orders that could be filled, and then that gives you historical economic information that you can look at.
By the way, on a slightly different topic, I've been monitoring the tweets, and in response to something we all said 5 minutes ago, someone just tweeted, at Princeton BTC, almost everyone describes Bitcoin as simple and easy to understand. Meanwhile, in the rest of the world, and then we don't know because it's only 140 characters. Cool.
Peter, I have a quick question for you. Earlier, you described some of the shortcomings of merged mine coins. And I know you've done some work with side chains. What's the status of that? Are you actively working on that? Is it just kind of in white paper mode, or do you need some help?
You mean the side chains where you go and, well, for instance, the side chain I proposed for Zero Coin last summer?
I think it was not even that long ago. It was like merge mining versus side chains, and
Yeah, well, essentially, it is just sort of, if you can create an incentive that's robust, that also is robust enough against, likely attacks, then yeah, no, you can go and make a side chain that's based nothing more on, I put some data in the Bitcoin blockchain that's just a hash saying, yes, this data exists elsewhere, go find it. But you have to be very careful that you're not in a position where the value of that data for you doing your transaction or something is well under what it costs to actually do, or it becomes possible to do attacks where you just go put fake hashes and you never release it.
I think Andrew has a question.
This isn't exactly altcoin, but this is a question for Jeremy and Matt. It relates to both cryptography professors now, and this has been a few years since Bitcoin kind of started. Have you seen any positive impact on Bitcoin making cryptography more accessible or easier to understand? Or what I seem to be seeing, my limited view, is that people are really, with Bitcoin, interacting with public key cryptography in roughly the correct way, where your address is your public key in the mental models about right, and your wallet is your private key in the mental models about right. And with GPG, that was never the case. The threats for email don't make sense. So, I mean, do you see this with your students or in the discussions you have? Is it good influence on the understanding of crypto?
Go first.
So yeah, I think it's made a huge difference. So I think Arvind was saying something yesterday about if you look at all the cryptography people use outside of Bitcoin, there's not very much that existed post, that hadn't been invented, by 1990 or so. The crypto we use is very limited. Then all of a sudden there's this explosion of people using very sophisticated, relatively sophisticated crypto to do relatively interesting things, and now even more interesting things. So that's been great, and I think all of a sudden people realize that all of this promise we had to do things beyond just encrypting messages, which is boring, but actually achieve neat things, it's been there all the time. Nobody got around to it till Bitcoin.
Yeah, I've taught Bitcoin to undergrads in a crypto course, and they love that lecture. And it's a really nice way at the end of the course to sort of bring together a lot of the ideas. And of course, it doesn't use all of crypto. It uses a limited set of primitives. And then they have optional projects, and Bitcoin is often a topic that they choose. So I don't know if it leads to better understanding, but it definitely led to more interest. Another thing I did was recently, I did this Commitcoin paper quite a while ago, and then I stopped doing research on Bitcoin for a while, and then I got back into it. And as soon as I put Bitcoin on my research interests, all these people came out of the woodwork wanting to talk to me, students wanting to work with me and stuff. So it definitely helps with the interest, and once you have them interested, then you teach it to them, and they have an incentive to learn it because they want to understand it and it translates to real money. So
I just want to add to that it seems as though the crypto community, the research community, has been waiting for Bitcoin to die for basically every year, and it's really satisfying to see that they've been wrong about that so far.
I'm going to jump in on that as well. You ask a bunch of professors about teaching, of course, you're going to get a lot of interest in answering that question. So Bitcoin has been one of my favorite topics to teach, and one aspect that I want to add to that is I feel that I'm particularly interested in teaching crypto to students who are not necessarily computer scientists. And I've done some writing on what happened to the crypto dream, and I talk about the importance of teaching crypto to everybody almost at a basic level. And
my strong feeling is that even if you're not teaching necessarily how the math works, it is possible to teach everybody to reason about crypto systems at a certain level. And in my class this semester, I have several students from the Woodrow Wilson School of Policy here. They're not computer scientists, and I've had a wonderful time teaching Bitcoin to them, and they've been able to reason about the security properties and participate in discussions in class as well as any of the computer scientists, and that's been very gratifying to see, and I think some of them might be even here today.
Hey, how's it going? I know y'all have been talking more about altcoins from a technological standpoint, but I have a question about more of a social trend. Do any of you have any thoughts on what seems to be this growing trend of nationalized cryptocurrencies like the Aurora coin, Spain coin, Mastercoin? They seem to be aimed at like nations of people that have gone through economic turmoil to try and get like a robust user base right away by giving them away. Do you think this is a viable idea?
I see cryptocurrencies, I mean, particular Bitcoin, as reducing friction on transactions, and to me the idea of having more currencies does not do that.
Hi, it's actually another social question. So, beyond coming up with a technically sound design, obviously there's this huge obstacle in developing something like Bitcoin, which is actually getting people to use it and getting the word out there. So I'm curious how, I guess, each of you plans to do that with your own prediction market, zero cash, Mastercoin, and yeah, just curious to hear if that's something you guys have thought about.
Well, I mean, for me personally, I stay away from the PR, I stay away from all that stuff. There's a reason why I don't work just for Mastercoin. I also work for the competitor counterparty, Colored Coins, tons of projects at once, because I do not want to be in a position where I'm actually rooting for one particular coin. I want to be rooting for decentralized finance.
I try and avail myself of, if journalists have questions, government, I'll be testifying to the Canadian Senate. So I try and be a good ambassador. In Montreal, we have something called the Bitcoin Embassy. Has anyone been there? I'm curious. No. Okay. Anyways, and that's an organization that I haven't got that involved with, but I intend to. And it's really an outreach organization trying to get Bitcoin interest within the community in Bitcoin and building bridges between entrepreneurs, developers, the academics.
So I have a thought on that as well in terms of building bridges. It's not just about reaching out to the general public. I think one of the problems we've had in academia is that a lot of the research has been in our own world and not even connecting to the developer community as much as we should. And I think I'm really interested in helping build that bridge as well. And I'm really glad that several of the developers are here today. And I think we're going to specifically talk about that in the next panel. So that'll be, I'm very curious about the discussions in that panel.
Hi, one thing that was mentioned earlier in this panel was the idea that Bitcoin is hard to use because its price is so volatile. In the space of altcoins, though, do you think it might be possible in the future to develop an altcoin where the money supply is elastic, so that if there's a very strong demand or a surge in demand for the coin, more coins get introduced, but if the demand falls off, coins are pulled back, such that the purchasing power of a single coin remains relatively stable, even in the short term?
I think there's an enormous problem there, which is how do you measure demand?
So you could look at the exchanges, for example.
But then you have centralized exchanges influencing what should be a decentralized cryptocurrency. I mean, I think obviously you can do this if you start relying on humans. But when it comes to what is demand of a cryptocurrency, what is the actual money supply? I mean, look at all the debate we have in the Bitcoin community about what is the money supply? How many coins are lost? I just don't think crypto is the answer there.
Yeah, I don't see a way that it's technically infeasible, but there are difficulties. You basically have to internalize, if you look at the difficulty level in Bitcoin, that's set automatically, right? It's something you can measure, and it's something that you can adjust. And so anytime you want to dynamically adjust a parameter, that's a parameter that can, in theory, be dynamically adjusted. But I think what you'd have to do is internalize the exchange into the protocol itself. And so you'd be having to run the order book yourself. But then the other issue is that you really don't know who your participants are, and so you can make it look like there's a ton of liquidity when people are just selling coins to themselves using completely different identities. So I think there's a lot of problems that you have to solve. I don't think it's necessarily theoretically impossible, but yeah.
I know you guys have been talking about some of the difficulty of getting getting a cryptocurrency started, and about some of the aspects of how a lot of them have been built off of Bitcoin, like Namecoin, in order to have an already, I guess, sustained user base. But I know how you also have said that something like Bitcoin isn't necessarily meant for that. Do you think that Bitcoin will be adjusted so it can use for products like those, or do you think there needs to be or will be some other centralized system that will better support alternative uses for their coins?
Well, my thinking along that line is, going back to what I said much earlier, is that I see Bitcoin as potentially working as a proof of publication system where you show this data, you make sure some segment of the world uses it, and after that, well, then you start building upon rules. But how that transition would happen, whether or not the community would want that, these are all very complex questions.
It's been very interesting to listen to you guys. And Todd, I understand what you say about controlling volatility and controlling the value of a cryptocurrency requires centralized control somehow at this moment. But what I see is that we could have cryptographers set up a system where I, as an individual and a non-tech user, can just show up, register with pseudonymity, I think is the word, and then just the system understands that I am, that I exist, and I can interact with other users that are and exist without having to worry about exchange rates and such, because I'm exchanging value for value. Volatility exists even with gold. I mean, when people don't want something, they won't pay for it. So I think that that's a challenge for cryptographers now, to make that interface between a system such as Bitcoin and human beings such as myself.
I think probably the closest we have to such a system is Ripple. And the reason why Ripple can do that is simply because it's person to person. You're not interacting with the system as a whole. You're interacting with friend who's interacting with friend, a business partner, whatever.
Yeah, the original design of Ripple, I'd say, is close to that vision.
Cool. Let me end with one or two more questions that I actually had for the audience, but postponed because or to the panelists, but I postponed because I wanted to go to the audience. So I was wondering if we could hear some thoughts on. So this is going off of something Gavin said at the end, which is that these ideas like decentralized autonomous corporations, smart property, smart contracts, etc., are interesting, but something he doesn't necessarily see as getting there in the near term. But we seem to be in the habit of thinking a little bit more about the long term, and so this might be a better panel to consider that question. Over the long term, do you see these as being viable, interesting directions for alternative currencies, or are they going to be mostly theoretical?
So, well, there's a difference. You said viable and interesting. I think they're definitely the latter. They're extremely interesting. The viability, I'm sort of in the wait and see mode. I mean, I know there's a lot of movement on things like Mastercoin, Ethereum, but yeah, I really want to see how they play out before I'm going to reserve judgment on their viability.
I would reserve judgment too. I mean, I would absolutely say that it is not clear that decentralized finance with your bonds and all this actually makes sense. And I think we're going to find out. The only way we can find out is to try. And if we fail, we fail. If we succeed, we succeed. And me personally, what I do on a day-to-day basis is much more related to improving Bitcoin so that these things can have their chance of success.
So the one thing I would say, and I'm not an expert in this particular area, is just that the ideas behind Bitcoin were around for a long time before anybody got around to actually putting it all together and finding an application that made sense. These ideas may seem really exciting now, and then people may forget about them for 10 years, and then they'll come back and actually be useful. So don't rule them out just because it doesn't happen tomorrow.
So I think Joe had a question. I don't know if the mic is still around. Yeah, please, Steve.
So kind of a follow-up to the earlier question about all this renewed excitement about cryptography. Do you have any fear that the sort of ecosystem of altcoins will collapse and lead to public mistrust of cryptography and other applications? Because when I read, there's a lot of marketing hype for different altcoins that promise the moon to their users, most of which have not delivered. They use a lot of that I don't think that they've been well thought through cryptographically, and it's fairly hard to tell on the internet which altcoins have a sound cryptographic design from which ones that don't. So is there any fear that the public will sort of grow wary of any claims relating to cryptography the same way that it would be impossible to legitimately market drugs through email now?
Well, it's interesting. My interactions with investors in things like your Mastercoin, your counterparty, and so on, is that I think the smarter investors realize, yes, these are untested ideas. Yes, they can fail. And yes, we can accept that and we can go move on. And I think what we've seen in Bitcoin is so many crashes don't go as far down as people expect. It doesn't actually shake confidence in Bitcoin is a bad idea. It just says, okay, that altcoin was a bad idea. Maybe storing all your money at Mt. Gox was a bad idea. But, we improve and we fix these problems. And I'm sure for this whole spectrum of stuff, we're going to either fix these problems one by one till it succeeds, or we're going to find, okay, so there was one problem that didn't work and the whole idea doesn't work.
So over the summer, 2 master's students down the hall from my lab started an altcoin which suddenly became worth about $500,000 market cap. And so my thinking is that if you're investing in these things, you're very risk tolerant and, easy come, easy go. And I hope that the people who are doing the investing have that attitude and are not going to panic and walk away from the entire technology because of that.
I think in terms of altcoins, the amount of damage they could do to crypto in a large part is probably a small shadow of what a break in SSL seems to routinely do. I did mention, I did some work on SSL. I did mention also I did work on voting, and I've actually seen people cite the fact that there's all these breaks in other crypto systems as a reason that you shouldn't use cryptographic voting. And so I think, I think any break in a crypto system does sort of filter down, but I think altcoins are sort of unusual enough that probably a lot of people aren't as aware of the breaks as other things. I just wanted to mention one other thing. You mentioned market cap, and I know you mentioned it at the start. I just want to, I don't know, I can throw this out sort of as a question, but to me, I don't know if market cap is the right measure simply because a lot of these coins come into existence through mining, right? So you have a bunch of coins and 90% of a currency, just gets minted out of thin air, and then you have a really small portion that people made money for, but then what you take is the money that the people paid a small portion, or that bought a small portion of, and you multiply it by all of the coins, including the ones that just came out of thin air, and then you come up with this huge number. And so it's very different from, for example, an IPO where every stock was sold for that price. Someone bought that stock for real US dollars. When we talk about the market cap of a currency, not every unit of currency was actually bought with real money at that particular price, right? It could be that there was only one trade of one coin at a certain price, and you use that price to dictate the price of the whole currency. So I just thought I'd throw that out.
So actually, I wanted to ask a question to you about Mastercoin, right? They did a kind of not an auction, but does that actually help with the stability of the value of a coin? Does it give you a more accurate reflection of what it's worth?
I would say it gives you an accurate reflection of how much money people are willing to invest in it. But what it's worth, that's hard to say. I mean, when you bought into Mastercoin last summer, you would have been saying, yeah, I believe somehow in the future this thing's going to be worth money somehow. And that's all there is to it, and I wouldn't say it's an accurate representation of worth. I'd say what we will see is, actual companies use these systems for actual things, but that's down the road. And that's kind of my litmus test, along with, well, what ideas did I come up with, and do I think they're valuable?
Excellent. Let's give each panelist a closing sentence on the future of altcoins, and then we'll be right in time for the break.
Why don't we start down there?
Yeah.
Well, I think I'd say, I want you guys to go explore ideas. I want you guys to explore even the crazy ones, and sometimes the crazy ones aren't as crazy as they look. Sometimes they are, usually the latter. But, it's worth exploring the space.
Dogecoin. That's really all I have to say.
You know, I'm excited to see what things are going to work in real life. It's easy to write papers, and we'll talk about this a bit in the next panel. It's easy to write a paper, but to see it actually implemented and work is a totally different thing. And so that's what excites me most about altcoins.
Let me mention something that I thought somebody might mention during the panel, but nobody did, which is Ponzi coin, which is an altcoin that is openly a Ponzi scheme and worked for a while. The theory was that you're smarter than everybody else, so you get in at the beginning, and somebody is left. But it worked until the creator actually took everybody's money and ran. So, that was an interesting one, I thought. All right, thank you, everyone.